All right, guys, wanted to showcase our new indicators on the 1 minute time frame. Of course, I'm talking about EzOscillator V6 and our new indicator, EzOscillator. And this is going to be for scalping because these indicators really make scalping so much easier than ever before. And once I break it down in detail on how you can start using this to scalp, you will just be blown away. Before I jump into this, I just wanted to say thank you. The feedback has been incredible for this update, and you guys have been absolutely crushing. Take Jasper here, for example, who saw our new updates and went right at it, and he made, I think, almost 70% of his account in the first 12 hours doing exactly what I'm going to show you guys. So shout out to you, Jasper. So the first rule is we're going to wait for price to come to a level, and by level I'm talking about one of these EzOscillator support or resistance levels. Now it doesn't have to be exactly on that line, but you want to be buying at support and selling at resistance. So if price is at a resistance, like, we're not going to be taking any of these buys. Just be mindful of where the support and resistance levels are. And the second rule is we're going to make sure the oscillator is in an overbought or oversold zone. So I'm talking about these high and low zones here on EzOscillator. When price comes into this blue zone, that means that price is oversold and that we're going to be looking for a long position. And vice versa, when the oscillator comes above this red zone, we know that price is overbought and we're going to be looking for a short position. Now we're going to use this oscillator to dictate when we enter and exit. So this is the second most important rule. And the way I'm going to show you guys this is you're going to solely trade with the oscillator in these zones. So if the oscillator is kind of in the middle here, we're not going to be taking any of these positions, although you could and still be profitable. We want to wait for those most high probability setups, which is in these overbought and oversold zones, right? We want to take the trade when price is out of bounds, so to say. All right, and the third rule is that we're going to wait for the wave trend to flip when it's in these zones. So by flip, I mean we want the color of the actual wave trend to turn from red to blue. So you can see we come down here to this level on the 1 minute time frame, and we see that the wave trend flips from red to blue right here. So at that moment, we are actively looking for a long position. All right, and the fourth rule is that we're going to look for other EzOscillator confluences. So that can either be reversal signals, a mild buy signal, or an EzOscillator buy signal. You want to see at least one of those three confluences to be your basis for entry. In this case, it would be right here on this mild buy signal because we are at a support level. The wave trend has flipped from red to blue. We have reversal signals, so that is going to be our long entry. Number 5 is we're going to make sure the volume is increasing or decreasing accordingly. So if we're looking for a long position, we want to see that volume is starting to increase. And once we see that the volume is starting to turn from red to blue, we know that we can enter a trade. If volume is deep in this red and is not increasing, then we know we're not going to enter a long position because there are still sellers in the area. Now, as confirmation, once you've already entered the trade, look for this volume histogram to turn from red to blue when you're looking for a long position, or turn from blue to red when you're looking for a short position. Personally, I like to get in the trade before the volume histogram turns colors because at that point it is kind of a late entry and you want the best entry possible. So just look for this as you're entering the trade and after you enter the trade. Now your stop loss when you're using this strategy is going to be right below that EzOscillator support level, or right here at this EzOscillator buy signal. Or if you're entering off the buy and sell signals, you can actually put your stop loss right there at that buy signal. But most of the time I'm entering before that signal, so I'll just put my stop loss below the previous swing low or below that support level, which is right about there. And for starters, what I do is just target a 2-to-1 risk to reward ratio. You could target a 3, 4, 5, 6, whatever makes you comfortable, but to start, I'd recommend anywhere from a 2 to 3 risk to reward ratio. You could move your stop loss to break even after a few pips if you want to as well. That's really up to you. There's not really a set strategy for that. Personally, I like the set risk to reward ratio because as soon as you move your stop loss, it kind of skews the risk to reward, where it could have been a 3 risk to reward ratio, but you move your stop loss to break even after a 1-to-1 and then it comes down and hits your break even. So that's just something to think about when you're moving your stop loss. We have this wave trend flip from blue to red when we're in that overbought zone. Volume is starting to decrease, and we have that mild sell signal on EzOscillator as well as those reversal signals. You can enter a short position right there. Again, we can see that the wave trend is flipping from red to blue. Volume is starting to increase, and we have that mild EzOscillator buy signal. That is where we would enter a long position. And even right here, we came into this overbought territory. The ribbon flipped right around here. We also have that mild sell signal on EzOscillator, so you could enter a short position right there. And you can see we're at this clear support level. We've rejected from this level, in the past. We come back down to test it again. We have that easy algo mild buy signal. The wave trend is flipping from red to blue in this oversold territory, so we can enter a long position on the closure of that candle. Again, we see the wave trend flips from red to blue right around here. The volume is starting to increase, price goes up. Wave trend flips from blue to red, volume is decreasing. We get that sell signal on easy algo, and price drops. Now this is on the 1 minute time frame. If you want to go up to a higher time frame, such as the 3 minute time frame, you could do so as well. You see we have a beautiful trade right here with the wave trend flipping from red to blue, right in the oversold territory, and we have those reversal signals and that mild buy signal. We would enter as soon as that wave trend flips. And if you go back, you can see once again we have those reversal signals. We'd enter that short position, price comes down to the support level, wave trend flips from red to blue, volume is increasing, we get those reversal signals on easy algo, that mild buy signal, price goes up. Again, guys, you can look at this for yourself and back test it. This is money. Yes, I'm using the Heikin Ashi candles. Do I recommend to use the Heikin Ashi candles? Up to you. I personally like to use the Heikin Ashi candles with the oscillator on a 1 minute to 5 minute time frame. Reason being is that the oscillator is a lot smoother, the charts are a lot smoother, and also I find that the actual price and the average Heikin Ashi price are fairly close, so it's not really going to make a difference compared to when you're trading, let's say, the MNQ futures on the 1 minute. The actual price and the average can be very, very far off, but if you're trading Forex, you can get away with using Heikin Ashi, and your entry will be just like a normal entry. And I'm here on Euro USD on the 1 minute time frame. Guys, this is one of the hardest Forex pairs to trade, and you can see that every time that the oscillator flips in these overbought and oversold zones with other easy algo confluences, the trades are just money. Also, something else I like to do is play these divergences where price is making a higher high as the oscillator is making a lower low. These divergences tend to play out 80 to 90% of the time. So anytime you see a move like this, even on the 1 minute where price is coming up and momentum is going down, you can enter a short position on that sell signal and you're going to be in the money more often than not. Price comes into this oversold territory, flips from red to blue. Volume is starting to increase, right? Volume is increasing. We can enter on that easy algo buy signal and price is up. Now, I am using the default settings. If you're using the easy oscillator, these settings work across any asset, any pair. You don't have to change them. So you can customize it a little bit by showing the wave trend, the volume buy, the volume sell, the volume histogram. Leave all of these on. If you want to change the sensitivity, you can. That might make the wave trend a little bit easier to read. Personally, I like to keep it on 7 and 5, so I wouldn't recommend changing it, but if you wanted to, you could customize it a little bit. Also, the settings I'm using on Easy Algo are the default settings. I'll turn on all signals as well for the divergent signals. If you want more extra confluence, you can use these real-time divergent signals here on Easy Algo V6, which we've just implemented. And you can see that they do a great job of calling the bottoms and tops when you have confluence with the Easy Oscillator. Well, that's it for this video. Hopefully you guys can start going out there and scalping and making some incredible gains with the new updates. If you aren't part of the community yet, go to discord.gg/easytrades and subscribe to the channel for more trading content. I'll see you guys next video.